we're in the heart of earnings season. Some earnings are doing well, others are not. Now we got Amazon, and I told you that the Amazon earnings could move the market and give us a pullback to test the tariff lows, tariff sell-off lows. Also, it could be with the jobs report, or maybe both. Amazon selling off in after hours. It beat on earnings, but Amazon issues disappointing revenue forecast. So they reported better than expected earnings and revenue for the fourth quarter, but it's giving a disappointing guidance going forward. And so it's selling off. It's down. When I looked at it, down about 2%. Let's take a look real fast. Now, Amazon was up just over 1% for the session. After hours, we're down just over 2% at the moment. We'll be watching, see if we get a sell-off with the jobs report, get a reversal bar today in the S&P 500. Now, important economic reports coming out. Tomorrow morning before the market opens, we're going to get the jobs report. And again, it could be that the jobs report, the catalyst that we see a sell-off with. You know, we've had numbers coming out of the Labor Department way overestimating the amount of jobs being created, and there's discrepancies with the household survey. There's just, you know, we've had the deterioration, even with their fake numbers. We've had deterioration from 2023 to 2024, lower in 2024 by over 800,000 jobs. This is what we saw right before the recession in 2007. We see a declining amount of jobs being created, deterioration in the labor market, but it is expected to come in at 169,000. Eventually, we're going to see this number go negative. Again, either right before the recession or as we go into the recession, we will see negative numbers in the jobs report. The SOM rule's already been triggered, as I've said, but it's expected to hold steady at 4.1%. The jobs report, the SOM rule, which is the 3-month moving average of the unemployment rate, is already predicting we're going to move into recession. People dismissing the recession indicators. Well, it hasn't happened yet, so it's not going to happen. Warning of a coming recession. When it's triggered, it doesn't happen, the next day. It's warning that in the months ahead, we're about to move into recession. And it has a history of being correct. I believe the recession indicators, and there are several flashing. I've been talking about them. Get the jobs report tomorrow. Could we get a sell-off with that? Very, very possibly. And then we have next week, going into next week, we have the inflation data, something worth paying attention to. Eventually, this is going to go up, but you got the CPI coming in on the 12th, on Wednesday the 12th, and then you have the producer price index coming in on the 13th, on Thursday. This is next week, so something worth watching. We will eventually see the CPI begin to turn back up. Came in pretty much as expected, but it's turning back up, and again, we know, seeing the rise in the money supply on a year-over-year basis, 3.9%. So again, we're going to see the inflation data begin to tip back up. But guess what? It's not going to be because of tariffs. But as I continue to warn, we're going to get an inflation freakout at the top, and the tariffs are going to be a part of it, even though they're not going to be the cause of the inflation. It's all pointing fingers. This is going to cause inflation. We're concerned about inflation, and being extremely hawkish, and experts and all over the social media there. People running around with their hair on fire, all concerned about inflation. They should be worried about the recession because, again, inflation is going to go higher, but eventually we're going to have a deflationary bust and the inflation will be dealt with. It's going to go higher as it did in the 2007 recession. Initially it went higher, but eventually it was dealt with. It's a lagging indicator. Stick around. I got some really neat charts to share with you. We have the Dow down 125 points, down 0.28%. We have the S&P up 0.36%. Again, the VIX predicted this rally. It said we were going to get a bounce or bottom. And we're getting a sell-off with the tariffs. It's got it right. Nasdaq up just over 0.5%. The Russell down 0.39%, and the VIX was down 1.71%. Close at 15.5. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts and you like the indicators, let me know that by supporting the channel. It takes a lot of time and effort to do this. I just share with you the charts that I look at every single day. If you find that helpful, please take a moment to follow the link below and to support the channel. Most channels on YouTube have sponsors. I turn those offers down. I don't choose to go that route. I don't want to sell you stuff you don't need. So I just ask that you just partner with me, but I need to hear from you in order to make it work. If you could just take a moment to do that, it would be greatly appreciated. I thank you for considering that. Now, I'm going to show you the daily chart in a second. Here's a 60-minute chart. And again, we had the rising wedge over here on the 60-minute chart. Take us to new high. The rally we predicted happened. I told you we were going to get a pullback. We pulled back. We got the bear flag with the deep seek sell-off. And then we gapped down with the tariff sell-off. And we formed a rising wedge here. And we got possibly a back test of that now. Or maybe we are redefining the boundary here. That's possible. Like that, and we go up a little higher and then come down. We'll see what happens, but I'm going to be watching the jobs report. Going to be watching how we see the market open tomorrow surrounding the Amazon earnings that we're getting. We're going to be watching all of that. Very possible we sell off at the jobs report, but you have another bearish pattern either under construction right here, or maybe we've already broken down. And again, as I've said, we're back testing. Let me just put that back in here. So again, regardless, you got a rising wedge in either case. One is back testing, or one is breaking down. But we've moved at the very end of the session higher, getting that bearish hangman candlestick on the S&P 500. Which, if I bring it up close here, again, here is our tariff gap down, the tariff sell-off. Back to fill the gap here, and now we've moved beyond it, and we're getting a possible hanging man. Again, candlesticks have to be confirmed to mean anything, but again, this has a good shot at giving us another lower high and giving us a pullback for a higher low or a lower low, and I'll show you the daily chart zooming out in just a second. Now, just quickly, here's the S&P 16-minute chart. We had this divergence. Does that give us the bottom there? Do we now end up pulling back and confirming a higher low at some point? Again, could we go lower to one of these other support levels I've been talking about? But watching the RSI here very closely to see if we get another, it's multiple points of divergence that ended up giving us this bottom. Do we see this something similar right here? It doesn't have to play out that way, but it could. And watching the MACD as well. And remember, the 50 is still above the 200 period moving average. So again, I think you're in a bottoming process, whether it's a higher low or lower low on a pullback, we'll see. But I think you're probably going to get one. I think a rising wedge is developing here. Maybe we broke down. Maybe it's redefining itself with the surge, the late day surge. You'll see it up close in this video here on the 60-minute chart. Well, momentum's trying to reverse with a bullish reversal of conditions for the S&P. The momentum line here is still bearish for the S&P. Again, I'll be watching today's candlestick if it means anything or not. We are getting here the little arrow saying, again, momentum might try to turn right here. When that happened over here, it was just a counter trend and it marked a peak. When it happened over here, it was the beginning of the new rally surrounding Inauguration Day. We have the shaded area telling us that a squeeze move is going to happen, but the rally we've had is not the squeeze move. So again, we'll be watching to see how this unfolds. The momentum is turning back to bullish here with today's rally. We'll be able to remain there. So just some things I'm watching. Looking at the next sell-off, if we get a higher low or a lower low, and possibly does the hanging man candlestick give that to us. But the momentum line bearish here, but a bullish reversal of conditions with momentum, so mixed signals there, and then a hanging man candlestick in the daily time frame. Also want to make you aware of, we got a bullish reversal of conditions today. We got the hanging man candlestick, but it means nothing unless it's confirmed. We're above the 10-period moving average. You see the little arrow? That means we closed above the upper boundary of the cloud there. So again, it's trying to flip. Does it fail and we quickly flip back down and see a sell-off with the jobs report? Or again, do we pull back a little bit or maybe get a deeper pullback, end up setting up a higher low and still see it fail? But do we see the momentum remain bullish? You got a hanging man candlestick, which is bearish, and you're trying to flip momentum here. Is it going to be short-lived, or again, do we get that bigger pullback? We'll be watching closely. You got some green bars on the awesome oscillator here. If we turn back and get red, you could still come back and get your higher low or your lower low, and again, get the Fibonacci retracement or fill the gap from the CPI gap higher. We'll be watching. Nasdaq is trying to turn back up here, so we'll be watching. It tried to turn back up here with the deep seek gap fill, and it ended up turning right back down and filling. Do we get the same thing here? We'll be watching. Momentum is trying to flip now, so I wanted to show you that here on the S&P. The Nasdaq, the same thing. The S&P ribbon here, it hasn't flipped back to bullish, but we did get that hanging man candlestick, so we'll see what happens. But we are trying to flip some momentum. Here the momentum is not bullish yet, with the ribbon there flipping back to bullish. We'll see if it does, or again, if the bullish reversal of conditions that I just showed you on the S&P, does that end up failing? Like some of these rallies over here. Again, we had these big rallies up. We tried to flip the bar to blue, but it ended up not being able to flip the ribbon, and we ended up turning back down and getting a lot of the volatility here. So again, we'll be watching. Do we see something like that? Or is this something we can build upon? My guess is you're going to pull back and get a higher low or a lower low, and then I think we're going to resume the advance. We'll see what happens. Now take a look at my daily chart on the S&P, and stick around because I got some really interesting charts to share with you. But this chart right here, again, we had a bearish hanging man form today, and again, that is a reversal pattern. So if we sell off with the jobs report, we close below today's low, you can get a pullback to get a higher low, or you can get a lower low if this move is not done yet. We go down towards our 61.8 Fibonacci, or maybe try to go to the 78.6 Fibonacci and the CPI gap fill here if we get something uglier. I don't know that we go that low, but again, I'm looking for a little bit more volatility for a higher low or a lower low, and then I think we'll resume the advance. My guess is we're going to turn. The candlestick means nothing. Candlesticks mean nothing unless they get confirmation and a follow through. So again, I think this is a pullback candlestick in all likelihood that will probably give us a test of the tariff sell-off low over here. We didn't quite reach our 78.6 Fibonacci. That low may hold. That may be the bottom, but we need to see more evidence if that's going to be the case. But if we do pull back, I'm looking for a higher low or a lower low. If we get the higher low, then this would be established as completing the wave 2, and in an ABC move completing here. It could be, though, that we get more of a complex corrective move and we get one more push down. That is certainly possible, and we don't want to rule that out. Could end up being a WXY correction, or just not finished yet with an ABC. And again, I'll be watching to see how it unfolds. But you got a bearish hanging man here. Again, this is a very interesting chart because, again, told you we were going to bottom here with the election gap fill, and right there was our major trend line off of the 2023 low, and I told you we were going to likely bottom there, in my opinion, and we ended up doing that. I told you on January 9th and 10th that we would bottom the following week. We bottomed the very next day on that Monday, the 13th, and I told you we were going down that trend line to fill this gap right here, and we bottomed there, and then we had the CPI gap up here, and then we had the bull flag, and we broke out of the bull flag going into inauguration day. Remember, I told you why was I predicting a rally? Because I thought we would get a continuation of the election rally that we had over here when we told you that the market was bottoming here. And again, it was a 60-minute charts that are calling these turns. Absolutely incredible. But again, told you I thought we were going to continue the election rally, bottom out, rally up we did, and then I told you again we were going to get some kind of pullback to back test this trend line right here, and that's now happened. Absolutely incredible calls. But we gapped lower, told, oh no, that can't happen. There's no possible way it's going to happen, and yet we get a deep seek sell-off. We saw NVIDIA drop over 18% on intraday, closing 17% lower, and we saw a major tech sell-off, and the AI stocks all sold off. And I keep telling you, NVIDIA has likely topped. In my opinion, it has, and we've broken the trend line, so that's telling me the days are numbered for the market. But we had the deep seek sell-off, and we came back to just above the trend line right here, and we went back, we filled the deep sea gap at 61.01, and then everybody said, oh, it's over, it's over. And I told you, I kept saying, we're probably going to take out this low. I have the guts to tell you exactly what I think. Very few people will do that. Most people predict things after they already happen. I tell you what I think is going to happen before it happens. Like right now, I'm telling you, I think we're going to pull back. A higher low or a lower low to validate this as a bottom or to get the bottom, one or the other, and a Fibonacci retracement. One or the other. I told you, hey, we're going to bottom. We bottomed. I told you that next week we were going to bottom, and we did. And I told you we were going to rally, and we did. About the November bottom, told you about the December top. Remember, we had the negative divergence on the 60-minute chart there. Then we formed the triangle. I told you if the triangle breaks down, we'll get a bigger sell-off. It broke down with the Fed, and we got that bigger sell-off. And I told you because that happened, we're likely headed back to fill the election gap, which eventually happened, where we bottomed at the 2023 trend line. So again, absolutely incredible calls. Now we have filled the tariff gap. The tariff sell-off gap right here came just above it 3 sessions ago, and then closed solidly above it yesterday, and again another close again above it today. A 3-day winning streak here after that ugly tariff gap sell-off. Now, what could give us more volatility? The earnings, maybe Amazon earnings, coupled with possibly the jobs report, that one or both, or even again more concerns about tensions between the United States and China surrounding the tariffs. Have the retaliatory tariffs coming into play, I believe, Monday. I believe that's this coming Monday, I believe, on the 10th. I believe that is the correct date. There be more uncertainty surrounding that gives us volatility. Now, eventually, and we've seen the tariffs with Canada and Mexico paused, and we've seen this rally back up with the concessions that I told you we were going to get. I told you over the weekend, we're going to see concessions out of Mexico and out of Canada to the United States. That happened, but there could still be more volatility surrounding the tariffs. In 2018, we had the tariffs, and we had a lot of volatility surrounding that. I think that we're eventually going to bottom out, either confirming this as a bottom or getting one more push lower, but not taking out the January low. And then I think we're going to make new highs. And sell-off is over. Everybody's going to go, oh, it's over, it's over. Okay, here we go. Here it comes, the bull market now. We're probably going to go up and get the final climax rally. We're in the final phase of the blow-off top, and it's likely that this is going to be followed. If this is a wave 2, as I believe it is, we'll have wave 1, 2. These subwaves are of our minor wave 5, and it could be that we go and we get waves 3, 4, and 5, the subwaves of minor wave 5, and complete the top at the levels I've been showing you. I think that is very likely going to be the case. And I think we're going to pull back and follow Bitcoin, because Bitcoin came back up, it filled the gap, and it's been selling off the last several days, and it's been leading the S&P 500. I think the S&P is likely to follow, and then we'll be watching, do we get a higher low or lower low? So I think the hanging man pattern has a high probability, very high probability of playing out. So we'll be watching to see how this unfolds. Now, if we go down and to a lower low, you want to be watching your 61.8 Fibonacci at 59.09. You want to be watching that level because we could back test this trend line yet again. If we go beyond it, like Bitcoin did, and it reached just beyond the 78.6 Fibonacci, then again we might come down here to 58.49 and fill the CPI gap back over here. And next week we're going to be getting the inflation data, so that'll be interesting to see if we have a sell-off or rally with that. But like I said, eventually it is going to go back up. So again, and I've marked the support levels here. We have the horizontal support levels down here at the November low, and then here at our January low, and that's our major trend line. And if we do go back and go lower, we can hit that trend line that I've been talking about one more time. So just things I'm looking at. If we see the hanging man play out, we start to pull back. If we get the higher low, then that means the ABC move could be done. I don't know that it's done. Get a lower low, then I'd be looking for it to be done here again in the golden pocket, which is between the 61.87 Fibonacci, or 61.8 Fibonacci, and our 78.6 Fibonacci here. Below that is our CPI gap. Now below that, we have again, horizontal support from our January low. We have VWAP support coming in here as well from the previous lows. And then we have VWAP support coming in right here in the golden pocket. Currently, our VWAP right here, if we get a higher low, is coming in, and that is from our previous two lows. The lows right here from the Fed sell-off right there when they lowered the amount of rate cuts they penciled in for 2025, and the low right here just before the election. So those are the VWAP support levels. This is these levels are VWAP support right here. So that would be a higher low scenario, that not taking out this low. And then again, the VWAP support here, down here, if we end up getting a bigger sell-off. So just levels of support I'm looking at. The VWAP is volume weighted average price, and it is an anchored VWAP in that we anchor it from a point here, and that gives us an interesting support level. These VWAP support levels are anchored further back at other highs and lows. Now, if I just zoom out here, you can see the VWAP support levels, and I've even added one from the previous low right here. Now, again, the low here, the high here, from the July sell-off down to the August low in 2024, and the higher low here in September, they give us a VWAP support. The higher low in September gives us this level. We bounced off of it right there. It gives us this level. That was the November low just before the election rally, but that's coming into play right here. So if we do come back and back test again, that would be a level of support. And then the July peak, the August low right below that, just above our January high and at this support level. So that's another area should we go back and fill the CPI gap. And then you have these levels down here. If the January low were to break, again, these longer term support levels from the 2022 low, a higher low that's set up here, and another higher low right here, the black line from this higher low, the March sell-off there in 2024. So again, we'll be looking at these levels, but like I said, I think you're going to set up a higher low, go higher, and then eventually come back down and start breaking these support levels that I have right here. So, well, I think we got a good shot of pulling back. I don't know if we will establish this as a bottom or get another push down and get a deeper Fibonacci retracement. But these are the levels that I'm looking at here on the S&P 500. If the hanging man plays out, then we'll be looking for a pullback to either give us a higher low or a lower low to establish a bottom. But like I said, I think that January low will hold. But to take the time to show you these support levels, we are getting another lower high. So recently we have the series of lower highs, lower lows, but here we had this rally that I predicted would happen, gave us a higher high, so we're looking for a higher low to be established to resume the advance and then clear this area of resistance over here from our high there in the low 6100 range. As we're getting this rally back up to fill the gap, and it's kind of interesting. You gap down with DeepSeek, you went back, filled the gap, and turned down. You went to a lower low here with the tariff sell-off. You went back up to fill the gap, and again, do we turn down? It'll be interesting. Now, so far, Bitcoin is getting a higher low. They take out that low slightly, but again, I'll be watching to see if the S&P now follows Bitcoin's lead. I've been watching that Bitcoin ETF. They're been mirroring the S&P 500. The S&P's been following it, and it's selling off. So do we see the S&P now sell off after filling the gap? I think that's likely. And just quickly, I believe that we completed minor wave 4. Everybody said, oh no, we have head and shoulders. We're all going to die. I told you it was a fake pattern because I believe that was minor wave 4, that we're now in minor wave 5, and I think eventually we're moving up to this channel line. And when we reach that, I think these highs are pointing to the next high. This is the 2022 peak right here. And I think that we'll reach this area, and I think we're going to top. But right now, I remain bullish. I believe we're going higher, even though my signals warned we are going to get a pullback, which was correct, just like they warned about the bottom of the rally for January, which was correct. Just quickly, Bitcoin's doing the same thing. It is pulling back right now. We've had the January low here, just like the S&P. Again, the bull flag, the head and shoulders evolved into the full bull flag. We had the low on Monday with the tariff sell-off. getting a higher low, moving beyond the 78.6 Fibonacci, moving back to support of this area. S&P is probably going to do the same thing. It overthrew the 10 period. The S&P is now overthrowing the 10 period moving average. If it drops back below, it will probably see something like this happen. Bitcoin rallied back up, and the Bitcoin ETF immediately filled the tariff gap. S&P did it a couple days ago and then continued the rally. Again, will the market follow Bitcoin back down to test this low and maybe take it out or get a higher low? We'll be watching closely. They keep doing the same thing, the head and shoulders patterns, the bull flag, the breakout, the rally with the inauguration day rally, the continuation of the election rally, as I've said, the pullback. Amazing similarities between the S&P and Bitcoin. So both point back as I predicted, but Bitcoin is resuming the pullback to test the low. S&P is not there yet to test the tariff lows for Monday. We'll be watching. And maybe they both get higher lows surrounding their 100-period moving average. Bitcoin's just above it here. S&P could pull back towards that 100-period moving average. If the S&P pulls back towards a 100-period moving average, we may hit this trend line right here. Here's the pink line. That's the 100-period moving average. This trend line right here is the trend line from the 2023 low. We bounced off of it here. And again, it's forming this massive rising wedge. So I'm looking for this wave 2. And I've got two scenarios. One is that, okay, the bottom's in. We pull back and we get a higher low, and we're on our way. We're making wave 3 right now. We're already in it. And we're just starting it. The ABC move is done. Certainly possible that the bottom is in. I told you we would back test. We did. Okay. The other scenario is we get one more push down, maybe hit that trend line, maybe move a little bit lower, tag our 100-period moving average, or possibly even come down and fill the gap from the CPI rally, hitting the 78.6 Fibonacci, and then get the rally. So I have the two scenarios here, but eventually I think we're moving up to this upper boundary right here, and I think we're in minor wave 5. I told you that's why I thought that this was a fake head and shoulders. Everybody was saying, oh, no, we got a head and shoulders. We're all going to die. And I told you it's a fake pattern. Everybody was saying, oh, no, we have a double top. We have a double top. And again, I think you've got another fake pattern. I think the bull flag is being back tested as I predicted it would break out and form and then be back tested. And so far that has been proven correct. So we'll be watching for a higher low above the January low. I don't think we're taking up a January low. I'm watching this trend line. I'm watching the 100-period moving average, watching the upper boundary. Once again, our Fibonacci retracements. And that's why I took the time to go through those support levels to show you where we could find support. Whether we get a higher low or a lower low, we'll be looking for clues. You know, I was able to predict the things that are happening here, looking at support and resistance levels, and that's why I'm showing you those support and resistance levels. I don't know if we get a higher low or lower low. I predicted the pullback correctly. I'm looking for clues to see if it's done. Now, I told you over here at this low that we are still going lower. That confidence because of what I was looking at with my indicators. I don't necessarily have the same confidence here. I'm looking to my indicators to give me clues if we get a higher low or lower low. But regardless, wave 3 is coming, and it may have already started, so do keep that in mind. But the pullback I predicted has happened. It very well could be done. I'm not so sure that it is. We still may hit that those Fibonacci retracements. We still may go down to 59.09. We still may go back to this trend line here from our 2023 low. And if we zoom out here, this is a 2023 trend line that I was predicting that we would bounce off of right here. I talked to you about this before we ever reached it. And again, this trend line, I told you we're going to bounce off of it. That on the 9th and 10th and leading up into it, I told you that's where we're likely headed. On the 9th and 10th of January that we're going to bottom the following week at this trend line, and we did. That Monday on January 13th. Things played out as I expected it would. Now I'm looking for clues, but we may hit this trend line once again. That's certainly possible here. We were just short of it there. Point back to the upper boundary here. Again, we may at level or even get a higher low, but eventually I think we're going up here to this upper line here. And this will be the final phase of the blow off top once this pullback is done right here. Told you over here was the last major by the dip right there at the wave 4. This is one of the last two pullbacks that we'll get. We'll get this wave 2 and then we'll get a wave 4. And then again, you're going to get the wave 3 and the 5 being advances. So again, this is the last minor pullback we're getting. The last major by the dip right here was back at the January lows I talked about. Now here's the trend line on the weekly chart. Again, our 2023 trend line there. I told you we were going to bounce off that trend line, get back above the 20-week moving average, and begin to head back up towards this upper channel line. And again, here's our rising wedge in the daily time frame. And again, it looks to me like we're going to intersect here going forward in the weeks ahead. That could take us towards 63.40, but it could be higher if we take our time reaching it, or lower if we reach it immediately. But ballpark here in the next few weeks could be 63.40. A number, though, is not the target. The trend line is the target. We failed to reach it. We went sideways here for weeks in November and December, and had the December-January sell-off and the January peak right here. So we've gone sideways. That has prevented us from reaching that level to complete a larger wave 4. So again, I think we're in wave 5, and we're going to end up going up to this level. And then I think the market's... Now, the Nasdaq got a bullish reversal of conditions, too, with momentum. The S&P got a hanging man, didn't get that with the Nasdaq. Nasdaq's not been able to move to new highs above the December peak over here, so we're watching that. Nasdaq is coming up here. Again, we're hovering near this gap fill from the deep seek sell-off right here. We've filled it on an intraday basis there, and here we're coming up here, testing it yet again. Some oscillator bars are green, so we'll be watching. Is this going to be a fake move where we turn back down and not see NASDAQ be able to clear the resistance zone here and here at the highs, but we turn down and we end up going back down? We'll be watching the 50s. If that's the case, we're watching the gap fill back over here, just below the 20,800 area, right around the 20,700 range, in that high 700 range. And below that, we have our gap fill from the election down here, way down here. So we're watching these levels on NASDAQ. Should it stall here, momentum is trying to turn, so we'll be watching to see what happens. Do we get a pullback with things? Amazon's down in after hours. What does the market look like tomorrow with that? We have the jobs report, and still concerns about tariffs and the retaliatory tariffs between the United States and China. If it fails, is it one of these where, like right over here, it turned bearish but quickly turned right back to bullish? Here it turned bearish, quickly turned right back to bullish. Does this bullish signal quickly turn back to bearish? A lot of choppiness in there. Is it one of those kinds of moves, or is this sustainable and ends up taking us to new highs, clearing the resistance zone? We'll be watching, but there might be some more volatility now that we're filling these gaps. The potential rising wedge on the S&P 500. Saw that momentum in the weekly time frame turn back to bullish with the bullish reversal of conditions on the weekly chart here, and we're getting the green, as I pointed out earlier in this week. Again, if it forms by the end of the week here, by the final print for the weekly chart, again, I think you're going to get this divergence where it's going to take us to the resistance areas, and you're going to complete this divergence right here from the December high. We've already moved higher, but I don't think it's done yet. And I think that, again, we'll see several green bars here over the next few weeks to give us that. And then I think you'll complete the top of the resistance levels I've been talking about. Again, if the NASDAQ does get a pullback and the momentum fizzles out, we'll be watching, again, the trend line right here to see if we get establish a higher low or back above the 10 and the 20 period moving average. So we'll be watching the NASDAQ's trend line right here. And then, again, should we lose that area, you have the gap fill right here at that 20,700, high 20,700 area, and our gap fill from the election back over here, which was from the election rally, 200 period just below that. So the levels I'm watching. But if we pull back, again, do we test this trend line, and does it hold? What happens to the bullish reversal of conditions that we're getting on the S&P and the NASDAQ today? We'll be watching.